there's some interesting things going on with Russia, China, and India, where they are making exchanges with each other, not using the dollar as the baseline currency anymore, but instead using gold as the underlying currency. And this is the first time in, I think it's 50 years, that the US dollar has not been used as the exchange rate between those countries. What does that mean when there's an increase in demand for a limited supply? It means that they become more valuable.
Can we start with just the basic question of gold and silver as precious metals and as alternative investment options? And can we begin there as to what role they play in our retirement portfolio?
What a great question. The idea of having silver and gold, there's nothing wrong with it. The fact is, it's a physical, tangible thing in a digital world. It's not a bad hedge to have, whether you're going to use it as just an investment, as a long-term legacy thing. There's a lot of things you can do with it. And there's just something cool about like physical gold, like having a bar of gold. But at the same time, I just think we have to be aware of what it is and what it isn't. People use it for an apocalyptic hedge. And then they say, well, if everything goes crazy and the dollar collapses and the stock market collapses, we'll have physical gold, which I agree. You're going to have to figure out a way to get Kroger to take it when you go buy your groceries or the gas station. But if you're down there shaving it off, you can do what you got to do. A lot of clients like to have it as a dollar alternative in their portfolios, whether they're buying like GLD or SLV or, they're buying into gold funds or ETF funds. And they like that because they say, well, gosh, if the dollar's unstable, then I can invest in that. And it's almost like a bond alternative too, where it can go up. And it's had an incredible year. It outperformed the stock market by a lot in the last year. And then there's the role of, should it be in my IRAs or my Roth? And people have these, depositories that will hold on to it for you. But at the end of the day, what should it play and why is it going so crazy? See if any of this sounds familiar. Hyperinflation, political uncertainty, wars, when seasons of war. And then those are three big ones, right? All those three things are going on at one time. Great time to go into gold and silver, but typically it would go into a growth pattern, but not a 50% in 1 year growth pattern. Okay. Another interesting thing about gold and silver is there's typically even though we don't know the total number, there is deemed a limited supply, right? Because there's only so much of it on this earth. You can't print more gold. You have to go find it and harvest it, right? And so there's a limited supply. And right now, there's some interesting things going on with Russia, China, and India, where they are making exchanges with each other, not using the dollar as the baseline currency anymore, but instead using gold as the underlying currency. And this is the first time in, I think it's 50 years, that the US dollar has not been used as the exchange rate between those countries. So they are choosing to do their own marketplace using gold as the underlying currency. Well, what does that mean when there's an increase in demand for a limited supply? It means that they become more valuable. Now, China, Russia, and India, and I think Iran's also in that mix, but they are trying to do exchanges, not using dollar or oil as the underlying currency, but gold and silver, or mostly gold. But as a result, you're starting to see, they need all this gold as part of their underlying exchange. There's an increased demand, same supply, cost goes way up. So there's that going on in addition to the other three things you talked about. So I know this is a very nerdy way to go about it, but there is a high increase for demand on one side because of their exchange. There's a high increase in demand because of political uncertainty. There's a high increase in demand because of the wars. There's a high increase in demand because of inflation, and people are afraid of a crashing stock market, and this gold will be a good hedge. So there's 4 really good reasons to believe that gold has not peaked yet and silver hasn't peaked yet. But at the same time, I think it's not a bad time to maybe pull some of the chips off the table. I don't think the run's over. I think that there's more run to, as of today, we're in February of 2026 now. I think there's more run to go because the uncertainty's not gone. And the exchanges going on are still a new, birthing thing over there on the other side of the world. So I think there's more opportunity for growth in those markets. I still think they are a 10 to 20% play in your portfolio. We used to always say precious metals shouldn't be more than 10% of your retirement plan. Right now, if you're trading in digital, like in SLV or GLD or these funds that track with gold and silver, I could see a case being made for having up to 20% of your portfolio in it, but you're going to let it run up and then be okay with selling out of it as it hits certain peak points and taking winnings off the table, just like you would with Nvidia or Apple or Amazon. So I know that's a lot of information in a really short time.
It all sounds very complicated also. I think where a lot of people, the concern comes up. it's just complicated, and
Right.
people don't necessarily understand trading gold and silver the same way they understand the trade of stocks.
Well, and think of it this way. I always take it back to collectibles. So if Paul McCartney signs 100 guitars,
Mhm.
he gets these beautiful guitars, he signs them, and he says these can go out to eBay to be sold. Well, there's only 100 of them.
Yeah.
So as a result, there's going to be a certain value on them, $10,000 a piece, let's say. $10,000 for a Paul McCartney signed guitar.
Yeah.
Well, since there's only 100, if I want one and they're going for 10,000 and you offer 10,000, I may have to offer 12,000 to get that guitar. And you say, well, I'm not giving up, so I'll do 13,000 or 15,000. And it drives up the price because there's a limited supply and high demand. But as a result, there's this increased supply, so the price goes up. What happens if Paul McCartney then says, you know what, this did so well, I'm going to sign another 100 guitars. Well, now there's 200 guitars. I don't have to fight as hard to get it. I can pay a little less because there's more opportunity for me to get them. So the value of the guitars goes down, not because Paul McCartney's any less cool, but just because there's more of them available. So I have to fight as hard to get them. That's what's happening a lot with the US dollar right now. We have printed more money as a country in the last 5 years than in the entire history of our country. In the last 5 years, we've printed more new dollars, put more new dollars into circulation than the entire history of our country. Wow. So what does that naturally mean for the value of our dollar? It's going to decrease in value because there's more available out there and there's more in supply, in circulation. So as a result, it's less valuable. When the dollar decreases, people say if the value of the dollar is going down, I'm going to go buy some gold and silver to hedge against it. So there's a lot going on right now. And all that to say, there's moving pieces. What happens then in a couple of years? Well, then it's going to flip the other way. And part of the plan is that it would increase people buying American products because the dollar's cheaper. And so therefore they can buy more stuff. There's a lot that goes into the planning and some thought there. But if you are building a plan and how do I invest? How do I use these tools to my advantage? Number one, become educated. That's why we do this channel here, specifically to say, here's nerdy information and how you can try to disseminate that into a retirement plan. So one, educate yourself, be armed with the why, because then the how can make more sense. If I understand why gold's up, well, then I can see kind of the markers of when gold might come back down and maybe I can get out of it. Number two, you want to know how to use these things to retire comfortably and safely. So people are actually getting nervous because gold and silver are doing so well. That's the phone calls we're taking and the meetings we're having. People are saying gold and silver is doing so well. I'm like, right, aren't you happy? Like, it's a little too well.
Why? It's suspicious. Why?
Yeah, it's not supposed to be this good. And people are like, what's the matter with it? Nothing's the matter with it. There's just a lot of perfect storms coming together. There's a melt up a lot of times before a meltdown, which is a great term for precious metals. But when you have a melt up, it's when there's a sudden rush to demand. And then all of a sudden the actual demand against the supply levels out. And then you have a crash back down. I don't think we're there yet, but I understand people's concern and fear about it. Just do what's appropriate. Have no more than probably 10 to 20% of your portfolio in gold or silver. If you want to have physical gold and silver, that's great. If it makes you feel better, that's great. But I think you can be just as productive using them inside your portfolio and then selling out when you want to get out of them. But there's opportunity to build it as part of it. I wouldn't build my whole retirement plan around it, nor would I say, oh, gold and silver or whatever, they're overpriced. I think there's still more run to go as of February 26th. Not a guarantee, but I think that there's some more opportunity for growth in them.
Okay. Well, working to help you understand what your opportunities are in various investments that are available unto you in your retirement plan is what Mike and his team are working on every single day in the office. They're helping their clients with, they can help you with as well. So if you have questions about gold and silver, real estate, stock market, all the other investments that you can or do have in your retirement plan, reach out to us. Let's begin that conversation, help you understand how things can work for you in the years ahead, what would work for you, what maybe wouldn't work for you depending on your goals.